Hello there, everyone, and welcome to this very special presentation on panning for the best gold stocks. You know, gold stocks have always captured the imagination of investors, but the real challenge is knowing which ones can truly deliver glittering gains. So this week, we intend to show you how to cut through the noise and zero in on the strongest gold stock candidates with the highest potential to shine. Discover one of my favorite ways to sort through stocks for the next big winners and learn smart ways to manage them so you can maximize every golden opportunity. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, and I'm delighted to run you through this hopefully highly informative presentation. Let's jump in and take a look. All right, so here we are at the home page for VectorVest, and hopefully you have already a somewhat solid understanding that the gold market should be timed on the gold market itself. And so when we're talking about miners, one of the better places aside from, say, the GDX would be the Huey, which is referred to as the Gold Bugs Index. And so in VectorVest, we already have a timing model to help us pinpoint potential entries and exits for the big runs in the gold market. So the first thing we ought to do is set the stage by looking at the appropriate timing to be buying gold in general, right? So let's do that. First things first, I'm going to go right up here to the top, go to the Graphs tab, and from there, we'll clear everything out that's here. We'll take a quick peek at the Huey. All right, so it's HUI. Here it says right on your watermark in the splash screen, Gold Bugs Index. This is a market indice, right? It's updated at the close every day in VectorVest. It does not stream in real time, but does not need to. So what we do is take the end of day perspective on entries and exits from now and for the future. All right, so what we're going to do is come over here to the right and make sure that we put on the Midas touch, because that was the initial inception of that layout to begin with, was looking at and analyzing the Huey. And so first thing I do is go find that over here in my directory on the right. And one of the challenges, doesn't seem like it on the last year, but one of the challenges for investors and traders considering gold has long been the volatility. And so what you're going to have here is a layout that really just tries to capture the robust runs in the gold market. You know, for that, the timing is going to be smoothed out. It's going to take a longer term view at entries and exits, thereby giving the instruments you buy, whether it's spot gold itself, which should still perform very well, or even the miners, it's going to give you a nice backdrop for that run. So with that out of the way, first things first, I'm just going to drag it back here, and we're going to look at the last couple of years on the Huey. And what I'm going to draw your attention to after you've selected the Midas Touch layout on the right in your platform, it's going to put on a couple of indicators for us here, and a couple at the top and one at the bottom, to be more exact. So you have this green line, right? And that's going to be a moving average of our stop price, STOP. And so that's our 13-week adjusted moving average of closing prices. All right, now when we look at the red line, that's going to be a 65. And so the first thing we'd like to see is the crossover on the price action using the stop price. And so when the 10 crosses the 65, that's one bullish requirement for signal. Then what we do is we come down and we smooth out the relative timing down below as well. Okay, so if the price action is quite volatile at times, so too can the relative timing action that corresponds with that. So we come over here to the right and we notice that that is smoothed out to a 40. And that has been our model for, gee whiz, I'm not sure when we first instituted it at this point, but we'll say well more than a decade, and I think a good bit longer than that in reality, okay? So the most recent signal to buy gold, and even gold miners, of course, more specifically, because we are a stock analysis and portfolio management company, right, is to look for when did that first occur? When did we have the crossover of the moving averages on stop, and when did we have the move above 1 on the relative timing with the 40 average? So treating it more like a histogram, if you will. Okay. And if I go back here We can, of course, zoom in to get more precise, and I might have to get my cursor right on it. But that is, in fact, the date. So on this date, the 10 was above the 65, and the 40 first closed above 1 on that day. Now, it's true, gold did take a little bit of a dip before it got going, and you can see some of this volatility that we talk about. But the idea here is that enough movement has happened at this point to where you now have another good potential entry on the Huey itself. Then we can start looking at the miners in VectorVest for good opportunities. So if you're following along closely enough, and I hope that you are, that would also mean you would have had an opportunity back here on March the 28th of 2004, which would have run the duration up to the bearish crossovers, right, on 12/17, 2024. So as you can see, we're trying to capture the sweet spot of these long runs when they develop in the gold market, but we also walked a balance of trying to make sure that it's not so smooth that when things get a little bit more volatile than you might expect, that you're not still hanging around and watching all of your hard-earned gains go away and dissipate, right? So it's always that balance that we're trying to really capitalize. In this case, we're trying to maximize the duration, but not take on too much risk by doing that. That's the goal. That's the hope. All right, so let's do this. What we're going to do next is look at how well some of the gold miners have performed just by top VST stocks in VectorVest. And then we're going to be releasing a brand new search into your software. And we're going to take a look at one of my favorite ways to sort through the stocks, okay, and get better gains typically. Nothing can be absolute for every single instance, right? But it's going to give a strong correlation to higher performance on most occasions. So let's take a look at all of that. First things first, let's go back and look at this, well, comparatively minor run in gold. And then we'll also take a look at this most recent run and look at some performance tape. And then we'll give you some ideas on management on these stocks in the future as well. All right, good. Let's do it. So first things first, where do I find the gold miners in VectorVest? Well, if you go to Stock Viewer, you're going to see a lot of them right there these days and have for a little while now, yeah? But what hopefully some of you are aware of is we track industries and sectors, right? We track over, I think, 226 or so industries at this point, maybe even more now at this stage. But let's go look at that. I'm going to go to Viewers at the top. We're going to go over to Industry Viewers, where I am now, okay? And we can see here I've got mining, gold, and silver. So one way to find that, if it's not towards the top of a list when you're looking, is you can alphabetize the list by clicking on this column heading. And sometimes you might want to click it twice just so that you get the A's at the top. And it sorts it logically in alphabetical order and you don't have to do the reverse. So that when you slide down, we're going to go to mining and then gold and silver. And you can see we have 3 different mining categories. We've also got uranium and other. But we're focusing exclusively on gold and silver in this presentation. Next thing that we want to do is we can open this up and we can do the look back from there. So what I'm going to do is just right click and view stocks in industry group. When I do that, it's going to populate a new window. And in here, you'll have a calendar at the top left. So we can see what are the highest ranked gold stocks right now at this given instance in time. The beautiful thing about VectorVest is we have the complete history for the database, right? So we can go back and see, all right, given that market analysis, how well could I have done over these stretches of time? So what we're going to do is do that. We're going to take the calendar date back. We're going to go into 2024. We're going to go to 328 if you were keeping score earlier. And you can see this is not associated directly with a confirm call or a green light or we're using the timing on the Huey itself. That's an important thing to remember, okay? So 328, this would be how the stocks would have closed up that day when the signal was produced, thereby giving us opportunities to consider entries the next day on these particular stocks, right? And these are just simply ranked by VST, which is a great place to start. That's one of the reasons VectorVest is in business today, right? So what we can do at the top, we have this little function up here called a quick test. Now, quick test is not going to give you fully managed portfolio results, But what it is going to do is give you a snapshot of performance that with proper money management, you might even be able to make better, or at the very least, certainly more livable, where you've got some management tied to the stocks themselves. So we will show that towards the end. Okay. Now what we're going to do first is just see if we got a good playing field to work with. So what I'm going to do is quick test, and in this case, just the top 10. And one of the things to keep in mind, just because we're going to be doing tests of 10 stocks, that's really for performance metrics ideas and giving us a strong basis for stock selection methodologies. Realize this, it's always a good idea for the most part to be considering at least having a portion of your portfolio, invested in gold. And then you can decide whether that portion, could be limited to 5 stocks or less, or all the way up to 10, just depending on your viewpoint. 10 does give you a nice balance of enough stocks to where if a couple of them hit some unexpected, news or something like that in the future, where the other ones can overcome that. So by spreading your money around a little bit, it does make some sense, but we'll leave those decisions up to you and in your particular style, right? But just know this, just buying the top 10 by VST over the first stretch. Now we're going to need to put the culmination date of that run in to get the real result. So we'll go back here to 12/17 of 24 as the exit or the end date. And we will run the test. And this batch of stocks did really well, as you might expect. So the top performer there was CDE. We got a silver stock in there actually with EXK. So, a lot of these miners really, at least most that I'm familiar with, mine a little bit of each to begin with. It's more of a what is the preponderance type of a deal. But having said all of that and getting out of all those weeds, these are the top gold and silver stocks. Most preponderance of them being gold, right, at that time. So we can see stunning performance, 7 winners, 3 losers, pretty good hit ratio right out of the gate with no management, right? Some of these guys at the bottom may have done a little bit better, a little worse over the period of time, and probably could have been managed and replaced and done even better, okay? But 26%, what I'm using is the GDX as a benchmark of performance, okay? So, traditionally I'm not going to be comparing this to the S&P 500, for example, where I would do that with just ordinary individual stocks, semiconductors and the like, right? But in terms of measuring your methodology, does it do better than the index that represents it is really the key variable. So in this case, strong outperformance as well, 26% compared to about 14.5. So off to a really good start here. Now, can we sweeten the pot? Can we manipulate the viewer in a sound way for more of a prudent style stock selection? Look, this wasn't an exhaustive study that I did here. What I did was just take my favorite sort for stocks in general and apply it. So if you've heard of Chappell's Champs, for example, we're going to be applying that very same type of methodology to the stock selection, see if it does a little better. Okay, so what I'm going to do over in VectorVest, under Unisearch, everyone now should have under the searches, special searches folder, a panning for gold search. So you just simply scroll down the directory here and we click it, and you can see very simple criteria, and then we'll talk a little bit about the sort. Okay. Also know that there is a search description down in the comments when we click there, so that will help if you're having trouble remembering some of the things that this search is trying to accomplish. It's all listed there. Now, first things first, we just went after some general liquidity, and in the gold and silver markets on miners, I'm not going to be as stringent with, say, prices have to be above $10 or so. Feel free to manipulate these things to your liking, but we thought this was a good framework to start with. So we're looking for at least 100,000 average volume. So there's some general liquidity from that alone, and then at least a $2 price point. So that helps as well, right? And of course, the higher you would take those numbers, the more supportive it could be if you needed to buy more shares than would be reasonable under these constraints. We are limiting it just to the mining gold and silver industry itself. And if we come up here to the very top, we're going to sort the returns not just by VST, but also ones that have a strong CI. That means that the price has been very persistently climbing up the page and a high growth rate. Okay, so that's the energy, that's the gasoline, if you will, that should continue to propel your cars forward, or in this case, your mining stocks. So tremendous sort gives you a little bit of an advantage there, I think. And so if we run the search and we run it back on the appropriate date where we started this presentation, which is 2024, that March 28th. Run it here. We do have a little bit of a different list of stocks, right? And again, that's because it's using this VST times CI times growth. So we're emphasizing growth. And if you look out here, you got really strong growth rates. And you'll also notice that by and large, you've got pretty high to relatively high RV. Safety in the golden miner space is pretty hard to come by. So all in all, those aren't terrible numbers, to tell you the truth. And most importantly as well, generally speaking, really high timing. So we're getting stocks that have been persistently moving up the page, but are also currently moving up the page at a pretty good clip as well. Okay, so when we quick test these as an example, they do a bit better, right? 31. And we also dropped off a loser by making sure that the earnings growth rates were quite strong and all the other factors, of course. Okay, so that's like good improvement here shown so far. And now we're more than doubling just the general miner performance. All right, so let's take that ball and run to the next set of data. Remember, hopefully from our first part of the presentation, the next entry date is 2/14 of 2025. So if we repeat this process, I'll go ahead and bring back the miner page. We'll go back or forward rather, in this case, to this year and February. We go to the 14th, Valentine's Day, right? In any case, there's no relation there. It just happens to be the right time. But what we'll do, a different list of stocks again, right? Well, at least to some degree, because it's a different date and it's a good bit of a distance into the future from the prior buy date. Now, when we quick test these, and again, this is just by VST, always a great place to start. You outperform miners themselves, but only, a slight bit in this case. You do have 10 winners, 0 losers, and it was a longer, better, stronger run in gold. So all of that makes sense. Okay. Now, if we go back to Unisearch, let's see if we can improve on the 70%. So come back over to Unisearch, take this date forward to February of this year. Okay, go to the 14th, run the search, and let's different list. Some overlap, some symbols in here, but certainly the order is shifted as well, right? And let's test these guys. 86% compared to the prior 71. And so in both instances, this sort has made a bit of a difference, and it's still looking for really high quality stocks with good timing and more the VectorVest approach to things. Look, there are probably sorts out there that can make a lot more money, but you'll also be taking on a lot more risk. And so again, it's just finding that right balance for you. For me, this has been a sweet spot. This has been something that I've looked at this sort on stocks forever. Almost my entire tenure here at VectorVest at this point. I can't remember when Chappell's Champs was developed, but it was a long time ago. And I've used that forever. And this is just applying that same type of methodology to the gold market itself. Okay, gold and silver. All right, so with that, what I did, I sort of got pinched on time, so I haven't been able to do exhaustive study, but the study that I've done, while limited, still made a lot of sense to me when I have a grasp for what I should typically see in terms of trying to manage maybe a little too tight compared to maybe trying to sometimes manage a little too loose, and what might be some of the sweeter spots to think about. So when I go into the backtest tool, I've already run these tests, and the important thing to remember here, I guess when, just kind of kicking things off, you're going to have to plug in those dates just like we did on the quick test to make sure you would get your results here. But what I did is just use the most recent run because I think that matters the most, and just simply ran out of time to do the rest. But having said that, you could see the foundation was already stronger. So now we're just getting into what are some of the better ways to manage. And so the first thing that I ran was just our traditional recommendation equals sell. That's always a great place to start. Okay, so basically after we buy that initial set of 10 stocks, we could hang on to them until one of them hit a sell rating. And when they did, we could sell that out and replace it with the next highest stock that we don't currently have and buy that one as a replacement. I used a dollar commission so that we could get an idea of activity because that's one of the considerations. For me, I like to go after low activity, high reward, that balance. So this is a great place to start. It's got pretty low activity. Then let's kind of look at the rest of the data here. So percent winners, certainly something to consider, right? And over this span, we can see that there was some decent amount of trading still. 66% of the stocks did win when they were either sold or are still winning now, okay? When we look at the total commissions we already did, the annualized rate of return is quite stunning. Compounded rate of return is even better because we're short of a year's worth of time here on the test itself. Max drawdown, certainly acceptable so far, but again, it's been pretty much a steady rally in gold. I'd expect that these numbers could grow a decent amount when we start looking at multiple years and things like that. That wouldn't be out of the question. What should likely remain true is that these methodologies should, in most cases, still fall into line with the results that we have so far. In most cases, right? If we then look at, say, a 20% trailing stop, not too tight, not too loose, kind of somewhere between 15 and 20% tends to be the best field goal for trailing stops over hundreds of thousands of tests that I've conducted since I've been at VectorVest for 20 years. I don't think that's a stretch, so sometimes do as a 25 or a 30 do even better. Yeah, but you're starting to get outside of, if I'm using 10 stocks, you're getting outside of what's really a good risk range on your stocks. So like 10 stocks with a 20% trail, you're not risking more than 2%, in any position initially. And that's kind of the outer limits. So it's also comforting to know that running between 1.5 to 2 times 2% risk on your positions is well within good, solid money management tactics. So having said that, the number of trades did go up here because remember our recommendation equals sell is pretty intuitive. And so I would expect that to be the case. It's trying to keep you in there as long as possible. So you're going to see a little higher turnover activity here. And did we amplify the result at all by doing that? Well, our rate of return did not increase, but our drawdown did decrease a decent amount. And so that's something to consider. I mean, if you're somebody who, that's a priority for you, then something like, you could take this testing and go to a 15 and try some other things and see what might work the best. And try to work at that max drawdown a little bit. But again, for me, 15 would be well within a risk tolerance. Because I know that every trade I'm doing, I'm controlling 1 to 2% risk on 1.5 to 2% risk on those trades anyway, by and large. Okay. Now, when we go to the next data set here, this is Profit Locker out of the box. And we felt really good about Profit Locker when we brought that to market, and we felt it would give us, in many cases, an even better risk reward sort of performance, and it did. In this case again. So we give up a little bit of gain here, but you also really start to nibble away at that drawdown. And so your activity goes way up. And so that's something that you got to think about. So those two things do tend to go hand in hand, by the way. And again, nothing is like 100%, but the more active you are, a lot of times you can get out of things more quickly. The downside is you got to get into something else, and let that one go. But by doing that, it hasn't eaten too much into the performance, and it's really kept, the drawdowns more in line with what would be awesome if you could stay in that neighborhood. All right, and then we get to Again, not a shocking revelation here. So look at what happened to our number of winners. It went up to 81.25% at this point. Our commissions went way down. Now, because we're less active, I'm also, again, not as surprised that we've given up a little profit potential in most occasions. Over the long term, that could change a bit over multi years. But aside from that, this isn't shocking at this point. And we look at our compounded rate of return, it's still very, very strong, right? Drawdowns have gone up a little bit because we're not as active. Okay, so again, the penalty a lot of times for not being as active is your drawdowns can have a tendency to go up. But that might be acceptable for you because, hey, look, Steve, my goal is to stay with these trades as long as I can and then cut them, when it absolutely makes the most sense. And so when I look at the view here for this one, you'll notice that this one is Profit Locker Pro, and this is the recommended stop. Okay, and so once again, Profit Locker Pro is a paid addition to your VectorVest platform. So I definitely wanted to provide alternatives out there. But for those of you that have purchased Profit Locker Pro, or those of you that might be interested, what this does is take a look at the inherent characteristics of the stocks based upon RV and RS and other things, and then projects what should be the right stop loss for each of these stocks individually. And so you might have a much different stop loss on one stock compared to another because it's a riskier position. Okay, it'll have a tighter stop then. If it's a great stock, then typically it'll have a much looser stop loss. And so it's really sexy in that it can do that. So if that's something that strikes you and something that you might be interested in, of course, you could always talk to our support staff. They'd be glad to help you out there. Having said that, any of these seem like very good starting points to at least get us getting into the conversation. And so anything from just following our recommendation equals sell all the way up to, a Profit Locker 50-15 makes a lot of sense so far. And so, gold has been on quite a run here. I do want to take the time to say this. I think it's important. It's due for a little bit of weakness at some point. Now, given the macro climate and the uncertainty and all these factors, dollars coming down again, all that stuff, it feels like gold isn't going anywhere for a while. However, just normal market activity dictates we probably have at least a few days of weakness coming here fairly soon at some point, right? So it might be best to kind of wait to start something new here if you haven't participated so far. But having said that, when I go to the current view of these stocks again, and we'll just take the top VST ones for now, I want you to look at some of these numbers, guys. Look at the RV column. 177, 176, 165, 157, 160, 155, 160. Look at the earnings. Vast preponderance are making money, and some of them are making a lot of it on the bottom line, right? Most importantly, look at the growth rates across the spectrum of this space. Gold has gone on a prolific run, and their margins are getting bigger. They're ballooning, okay? And so there is likely some very strong opportunity in this space for a while because their earnings are there. And once that catches on, I'm surprised we're not seeing a lot more discussion about these kinds of things on places like CNBC and other places, right? You look at we talk about successful investor buying stocks with rising earnings and steady rising price. Let's switch this over just to VectorVest Simple. Look at the earnings. And is it slowing down? That's the bottom line, right? Let's go to the next one. Let's go to the next one. Let's go to the Kinross, one of my favorites. It's been one of my favorites for years. Years and years. Anybody that's been in the Jockey Club, anybody that's ever talked to me about gold, that's one of the top 3 names that always comes up. Goldfields, right? Look at the earnings down there. Look at the earnings. Look at the earnings. So yeah, and you can see on the chart, we're stretched. There's probably going to be some pullback here. And it might behoove folks that haven't participated already just to wait for that. So what do? You wait till it stops going down and starts going up again, And when you see a lot of these stocks doing that, taking a look at the scan, running it, beginning to follow it, I think will be the right thing to do. So I hope you got a lot out of this presentation. And I certainly tried to do the best I could for you here. And it's a great way to pan through and look for some of the very best candidates when you feel the time is right again in the future. Some of you might want to wait for that reset, get that next run. And that's fine too. There's no rush. The best thing to do is to do it right. And so a full reset is always the best place to start. Gold is a volatile instrument, and even when things are really good, you could still get and run the chance of a high probability of a reset on the timing, on the Huey, okay? So that's certainly something that you got to work out for yourself. Another great thing to think about is you can walk before you run. You can start with just a little bit here, let all that shake through, and then apply the gas pedal. So that way you don't miss anything, should it keep running. And if it keeps running, a week later, things are still going up, maybe you buy a little bit more. It goes up another week, maybe you buy a little bit more. So there's no rush, it. So take all of that into consideration and then pick up the ball and run. But that's a great search. It's a great timing model on gold. It's a great search to use in the future or even now. But let's walk a little bit before we run. Okay, we'll see you guys soon. Hopefully you got a lot out of this. We'll see you soon. I just want to, at this point, thank everybody for being here. And we'll see you again next opportunity. Hopefully I see some of you in Vegas this weekend. We'll see you then. Good luck. See you soon, guys.